Out with the old, in with the new. Jerome Powell leading the central bank's rate decision for the last time as the Senate moves closer to confirming Kevin Warsh as the next chair. The Fed expected to hold rates steady at 2 p.m. today. Investors have their eyes on what comes next. Questions swirling on Warsh's commitment to Fed independence after the president's public feud with Powell. Warsh says Trump never once asked him to commit to an interest rate decision, but he's not shy about saying the Fed does need to change. Larry Kudlow, here we are, passed out of committee onto the Senate. It looks like Kevin Warsh will soon preside over the Fed at these meetings that we do every once in a while. What do you make of all this?
It's good. It's necessary. What was it, 1311?
That's right.
I guess some Democrat probably didn't show up.
Yeah.
He'll win on the floor, but it'll be a partisan vote, which is too bad because he's really a bipartisan. I mean, a lot of people are going to like Kevin Warsh as he operates over time and begins to downsize the Fed and downsize the Fed's balance sheet and redo the Fed's models. You know, strong growth does not cause high inflation. Low unemployment is a good thing. More people working is a good thing. All those Fed models thrown out the window. Forward guidance thrown out the window. And if Jay Powell doesn't resign like a gentleman, he'll lose his parking spot. That's the way. That's what I said.
Oh, nothing hurts more than that.
Lose the parking spot, or put him at the very end of the Fed, you know, where the water seeps in.
They're fixing that, I thought.
Well, they're trying to, but they can't seem to get it done.
It's very expensive to fix that.
Somebody said it was really a couple of $1 billion in cost overruns, so he'd have to walk through the water every morning. I don't think he wants to do that. And you can't have two CEOs. And just go out like a gentleman. You know, just go out like a gentleman.
Larry, I want to throw something in here, okay? And I just maybe to stir the pot a little bit, okay? You'll probably shoot me right down. But some people look at Kevin Warsh coming into this spot and they think, well, interest rate cuts are here. I mean, they're going to be coming. This is Warsh. It's Trump's guy. How is that not going to happen? I would say if you're expecting that, you might be disappointed.
Yeah.
At least in the near term, you may not get that. Do you think that's going to be a problem between maybe that set of expectations and what Warsh is actually going to do?
No. Look, importantly, Warsh said in the hearings that the president never asked for any promises or commitments. That's fair. And Kevin wouldn't have said that if it weren't true. And as he said, he wouldn't have accepted the job under those circumstances. And I liken it to interviewing a judge or a Supreme Court justice. So the president wants to know your character, your experience, your strength, your backbone, but he will never tie you down. He'd never say to somebody, you know, you have to be pro-life or you have to be pro-choice. Okay, now in his case, it's pro-life. Just like he wouldn't say to Kevin, you have to cut interest rates the minute you go in there. Warsh will exercise, you know, considerable judgment. Right now, obviously, you have an oil shock going on, and there's no rush to cut rates. The economy, I'm delighted to say, I hope we cover this, the economy is very strong. You're in the middle of a CapEx boom with very decent retail sales.
Right.
You get Q1 preliminary comes on Thursday. I think it'll be 2%. Maybe it'll get as much as 3%. Anyway, you know, here's what. Warsh wants to cut out one of the reforms, cut out the forward guidance. Just get rid of that. There's too much yapping anyway among not so much board members, but Reserve Bank presidents.
Duct tape.
Odd thing.
Duct tape.
Duct tape would be just fine. And then, look, he's going to work on things like changing the Fed models. He's committed that, and I think it's long overdue. I mean, look, the Fed has not distinguished itself in the past 8 or 10 or 12 years. You've been running over target, 2% target, for quite some time, okay? Ultimately, that's their test. And the economy hasn't been booming either. So it's time to revisit the modus operandi. It's time to revisit the econometric models. It's time to revisit the board staff, right? Keep the good ones, get rid of the old wood, if you will. This is what Warsh is going to do. He's going to bring some management reforms, some modeling reforms, some process reforms. It's not just about interest rates.
Can he do that? And how does he do that without upsetting existing people on the board? Making sure he pulls them along with them and make sure they're on board with his new vision of the Fed.
Well, look, I think, first of all, I think he's a persuasive guy. And I think that's very important. He's not a screamer. He's just a guy who likes to reason. Remember, he was on the board for 5-6 years. So he knows how it operates, all right? He's an alumnus. And second of all, he'll have help. You've got other people on that board that will probably help him. Mickey Bowman, for example, the vice chair for supervision, is a reformer. I think Chris Waller would be a reformer, too.
Yeah.
I think if Powell does the right gentlemanly thing and lets us, let go, then President Trump will have another appointment to put in there. Look, some of the Reserve Bank presidents are better than others, in my view. They're not all bad. They're not all good, okay? We could use some changes in some places, but whatever. Kevin will work with them. He'll reason with them. These are not crazy people. They're not crazy people, all right? They're people, I think, who, in many ways, should be embarrassed into making reforms because the track record is not what they'd want. Now, you don't have to hit them over with a hammer every time you see one in the hallway, if you get my gist, or every time he gets on the phone with the Reserve Bank president. But these are by and large people with pretty good economic backgrounds, and I think they'll respond to reason, and I think they'll all breathe a sigh of relief. That's what I think.
So I think you could say all of that, and it's true, and a lot of people have said it. Warsh he's supremely competent for this job. He's got the right outlook for it. Dagan, he does have a tough job, and this is a tough time to become Fed chair. So as he's trying to kind of rework the organization, he's also got to navigate some big things. Oil prices are one of them. The balance sheet is another. Debt is a huge one. Government spending, even though he's not in charge of that, that affects what he has to do with money. Talk about that.
The debt, the increase in the deficit. It's how much our debt is growing. That's an issue. Managing or helping manage the borrowing. No.
He's said, Dagan,
I know what he said.
He wants the Fed to be the monetary agency and let the Treasury Department be the fiscal agency and the Congress. So as I understand it, shrinking the balance sheet, what he'd like to do, he wants the Fed to own fewer bonds, which have all kinds of credit implications, mostly poor ones, bad ones. And, let the banks own the bonds, let the Treasury manage it.
Yeah, I know.
But keep the Fed.
I understand.
I mean, he's stated that, I think, as clearly as anything.
I know, but short-term interest rates, given how much of our borrowing and the vast percentage of our debt that has to get rolled over that is in T-bills, it does dictate whatever the Fed funds rate is. And wherever it goes, it does have a direct impact on the Treasury's ability to roll that debt and to finance our debt. Yes, it does.
But I disagree. Sorry.
Okay. Well, then let's have a.
I don't think there's ever been, honestly, I don't think there's ever been a decent study that shows debt and deficits impact on interest rates. I know it's almost taken as a given, but I've fought this for over 4 decades, coming on to 5 decades. Debt is driven by real returns. Debt is the price of debt and the rate on debt, the return on debt, capital returns, inflation expectations, the volume. I could show you times when we had almost no debt as a share of GDP, like in the 70s, when interest rates exploded up. And I can show you times when we had enormous debt, probably too much debt, like we do today, where interest rates have basically been historically rather low. I don't think, I think, here's a point. It's a bit technical. In fact, it's quite technical. The Federal Reserve Board, follow me on it, not the FOMC. The Federal Reserve Board sets the interest rate on bank reserves. Okay, not the FOMC. They set something called the Fed funds rate, which is virtually non-existent anymore because we don't have reserve requirements. But we do pay bank reserves, 40% or more, by the way, foreign, which is too bad. It's 3.6 something percent. It's almost the same as the Fed funds rate. Now, I look for Mr. Warsh to make some reforms there. Okay. I don't know why we're paying banks to hold risk-free assets
He
instead
highlighted
of
that.
making loans.
I think in his testimony, right? He or
mentioned
someone was saying that he agrees with Warsh and that the balance sheet helps Wall Street, interest rates help Main Street because in part because of the interest we're paying on the reserves. I believe it was J.P. Morgan and some of the other big banks that collected $15 billion alone in the interest on the reserves.
And on top of that, foreign banks, some of the calculations I've seen, foreign banks get over 40% of that money that we pay that the Federal Reserve pays. So this is the trickiest part because you have assets and liabilities. So if you're going to shrink the asset side, you have to shrink the liability side, and that's going to require some lower capitalization requirements and other deregulation, which Mickey Bowman is in charge of. So it ain't all going to happen at once. Okay, it's going to take a while for him to do what he wants to do.
Our deficit to GDP is north of 7%. That means our debt is growing wildly faster than our economy. And right now, we're staring at longer-term interest rates and even shorter-term interest rates that are heading in the wrong direction. 4.4 on the 10 and over 3.9 on, is it 3.9 on the 2?
I can check.
She'll look it up.
So,
because we were almost 4 on the 30.
So that certainly gives less room to cut short-term interest rates. And
391.
Bond investors have gotten their asses burned in the last, 5 years when they've loaned money to the federal government because the federal government shows no fiscal responsibility whatsoever.
I'm breaking in. Let me break in.
Wait, no,
Okay,
I'm not.
Finish up, then I'm going to break in.
You know what? Never mind. I'm just going to sit here because I have not been able to finish my thought twice. So I will just wrap it up and stifle. Go ahead.
I thought you were.
Go
finishing.
ahead.
I wanted to get one last thing in, Jackie. You got Jay Powell today on the stand, okay? Will he stay or will he go? Non-technical question, but I think it matters. What do you think?
I mean, I think he should take his ball and go home. It's time to go. I'm grateful this will be the last time we're going to see him today at the podium. I want to see what Kevin Warsh can do. I do think it's going to take longer than expected, especially with some of this volatility we're seeing in oil. I'm worried it might have a little impact on inflation and hamper his ability to cut rates as quickly as he might have wanted to. But having said that, you know, we've seen what Jerome Powell can do. I'm ready to see what someone else can do.
Well, you may get that chance very soon. He moves on to a full Senate vote.